thank you so much for joining me on the desk.
Thanks for having me.
We're going to be talking tech and global stocks. A great time. I guess it's always a great time to talk tech, but it's been sort of a punishing time recently. We've seen underperformance. What do you make of what's driving that?
I think it's a lot of things happening this summer, but growth jitters is obviously top of mind here. But I think there's questions around the sustainability of the AI spending. That's something we spend a lot of time on. I'm sure you do too. And look, Broadcom, for example, last night, it was pretty good, but it was the same read from Nvidia, actually. The results were good. The forward outlook is pretty good, but it's not
Stock's
being viewed
down
as good enough. So the bar is high, but I still think for tech broadly, if these companies continue to deliver, then it's going to be tough to keep them down for the long run.
I have to wonder if, I'm sure you don't like any sell-offs, but if you prefer the sell-offs that aren't really rooted in fundamentals, if it's just about expectations, but Broadcom, for example, its AI business tripled. It just, maybe we wanted it to do a little bit better, but it still tripled. So do you prefer these kind of sell-offs rather than there being a fundamental rot to the thesis?
Yeah, certainly. I think that's where you can make some alpha if you've got a differentiated opinion. So with volatility, you have to really take a step back and try not to be emotional about anything, because that's when you start making poor decisions.
The big question is, are you adding here or are you waiting for perhaps another leg lower? Because we're just only 4 days into September, a historically weak period for stocks.
It's feeling like we pre-traded the typical seasonality. You're alluding to the market generally doesn't do well in September, and we're in an election year. So, and semis in particular, tech more broadly, don't trade that well in the fall. But we're down so much already in the beginning of the month that I'm hopeful that we're pre-trading some of the jitters here.
Broad market participants will look at the breakdown we've seen in semis and say that's a tell. That's a tell of further weakness to come. What do you say to that?
I would say it's kind of, to me, if there's two components to price targets, it's going to be your earnings expectations and your multiple. So right now, it feels like the market is saying, okay, I don't know if I believe you yet, so I'm going to take your multiple down. That's fine. We're totally comfortable with that. We're more focused on the earnings durability of it. And we'll talk more about Broadcom later, but all indications are good for spending in tech for the next little while. In fact, some things are seeming to turn a corner right now.
Question comes from Galen. It's in the inbox. He wants to know about Constellation Software. Is it a buy, and at what price level? And do you see any risk?
Great company. Every time I've ever trimmed this stock has been a mistake. So that speaks to the question on where do you buy it? You can always ask about the valuation. Is it too expensive? But they just have a really good model and they're very disciplined about M&A. So I think it's a good company right now. It's still, even as they scale up, delivering really solid revenue growth, solid margins here. And even as the bar is higher for them to deploy more capital, their database of potential acquisitions continues to grow. So I think there's good room there. And then I would say one important thing to consider here is that maybe there's a counter-cyclical element to CSU in the sense that they don't budge on their hurdle rates. So if there's periods of sustained weakness or economic growth kind of rolls over a little bit, not my base case, but just saying, then then valuations can come to them.
So you would just hold your nose if you don't like the valuation. Generally, you'd be comfortable adding here.
I think if you're worried about valuation, then buy on weakness. But as I was alluding to from the get-go, maybe it's going to be from higher. That's generally how it's been.
Let's bring in Terver, who's in Sierra Vista, Arizona. Go ahead, Terver. You're on the line. What's your question?
Thank you, and congratulations on the 25-year anniversary.
Thank you.
My question, Mr. Obata, is on ASML, the Dutch company, which is a monopoly of one because they produce the machines that basically create the semiconductors. And I believe they're the only one who does that. They have some serious exporting restrictions just got on top of them by the Dutch government and the American government. How will that impact their business going forward? I know it's a very expensive stock, but it always has huge growth. Thank you.
Yes, thanks for the question. I'm honestly looking at this, it's sold off a lot, and I'm still not, I'm probably more neutral on this name than I have been in a while, really. They do have a monopoly position, but one of your key customers here is going through some serious problems, Intel.
Intel.
Like,
oh, yeah.
That's a whole cluster. So, and then on top of that, you talked about the regulations that are happening, and that's been known by the market. They're basically preventing ASML from selling in the highest EUV equipment into China. So that's known in the market, but could it get worse? There's talk about them not letting them service machines. So there's this tit for tat going on. So that's another concern. And then on top of that, because of the regulations on China on leading edge machines like the ones from ASML, they've been buying what are called lagging node or older generation technology. And so there's a concern for the equipment suppliers like ASML that maybe there was a pull forward in demand from China. They're buying what they can get. So
the observation on Intel is interesting. Could it work the other way because Intel is in so much trouble that how else do they get out of their innovation funk without spending on some of this machinery? I
think that's right. I'm hopeful. I think we've thought for quite some time that Intel was challenged, and it doesn't seem to be getting better right now. But I do agree. Hopefully, there's some positive resolutions there, and that could support the other side of it. But we have other concerns around this too.
Okay, let's bring in Elliot in Hamilton. Go ahead, Elliot. You're on the line. What's your question?
Good afternoon. Having doubled from 350 to 700 in the past year, what are your thoughts on Netflix going forward, and at what price, if any, would you start a position? Thank you.
Netflix, I think, is a good example of a company that's won the game. I think the game is over in streaming. If we go back and think about when Netflix was growing like crazy before all the competitors came into the market, we had conventional TV kind of deteriorating and streaming really gathering a ton of attention. And all Netflix's competitors looked at streaming and they said, wow, this is something that we need to be involved in. But little did they know that it's a very difficult business to do with profitability in mind. And so Netflix sucked the competitors in. They've had a very tough time. You look at stocks like Warner Brothers, it's been really, really difficult. But anyways, my point is that they used to buy content. Now they have basically an infinite shelf of content. Yeah. That's the thing with Netflix. Like we can joke about the quality of some of the programming. Like, let's be honest. But
you're not an Emily in Paris fan?
I mean, it serves a purpose.
Serves a purpose.
And yeah, there's worse than that. A lot worse. But point being, it's entertainment, and there's so much that you can't really run out of it. And so for that reason, I think it still provides the best value of all the streaming platforms.
And what a success on free cash. Like, I just remember for years tracking, how are they going to do this? They're going to lose their library to Disney. They're going to lose their library to Peacock, whoever else. And then they just in the matter of 5 years went from burning $1 billion, $2 billion to now spitting out almost $7 billion.
Yeah, and the password crackdown has been really successful thus far. And it makes sense, like maybe the bear case would have been people would just go without it. But again, that content library is really good. So I don't think I answered your question. It's expensive right now, but I would buy this on weakness. Any sustained weakness, I think they'll continue to do well. and they've won streaming.
Our next question coming from the inbox. Ross wants to know about Fortinet. What's your view?
It's done better recently. It was left for dead last year. Network security company, long time. The legacy business is in firewalls, so they're kind of trying to transition to a more modern company. You can see it's done really well recently. Our preference has continued to be for Palo Alto, which we think is going to serve as more. They've got their platformization strategy, which is basically we want to sell you a bunch of cybersecurity solutions on our platform. So that's really been our name, and we're sticking with it. But we're not upset at all to see Fortinet doing better. I think they're in a decent position. And then with these names that have a bit of legacy exposure, you get a little more valuation buffer than you do with some of the insanely valued high growth cybersecurity names. So
you'd prefer this over those? Like, are you talking, well, CrowdStrike before it?
Right, before.
Had an oopsie.
And Zscaler. Those ones are, there's zero room for error with those names. Fortinet and Palo Alto generate free cash flow. It's a good starting point. It's not that those aren't real businesses, but just to say there's a little more of a margin of safety on the valuation side.
Mike from Brampton's got a question for us. Go ahead, Mike, you're on the line. What's your question?
You guys run a great show. Just wanted to say thanks for keeping me informed all these years. I have a full position in Philip Morris, largely for income and the decent dividends that they pay out. The stock has really back sideways, and now it's off. Now, I wonder if you had any reasons for that, and it's good for me. And I want to continue to own it for income and maybe some more.
Okay, you kind of cut in and out there, Mike, but I think the gist of it was, can you continue to hold it given the run-up that it's seen? It's a nice dividend yield of about 4%. What do you think, Shane?
I think it's done amazingly well, surprisingly well. I just say that not because it's not a good company, but because it's in a controversial space, right? Typically, it used to just be about cigarettes, and then it's become more towards these. They have had some innovation. We haven't owned this name in a while, but I used to look into it quite a lot.
Oh, I thought you were going to say I used to smoke.
No, don't go there.
That's how you got the deep voice.
No, that's my parents or something. So they're doing these new products that are basically using vaporization technology, and Philip Morris also owns Zyn. So I think it's a good reminder that good companies are going to find a way to keep you involved, whether you're whatever thing you're using. So part of the reason for the rally, I'm not sure if that was part of your question, but bond proxies have performed a lot better, right? And this is certainly a bond proxy. So I think it's a name that you do have to worry about volume decline over time. Are cigarettes a terminal zero? Like, you could probably make the argument that someday it may no longer be a thing, but otherwise, like I said, they're diversifying their business. It's not tremendously expensive yet, but it is a lot more expensive than it used to be.
Let's bring in David from Calgary. Go ahead, David. You're on the line. What's your question?
Oh, good morning. My question is on Broadcom. It's not on Broadcom. Sorry, on Datadog. I added to my position, or started the position at 116 and added it to this morning at 103. And so just kind of wondering if it's a good hold or if I should be adding, and I'll just hang up and listen to your call. Thank you.
Yeah, thanks for the question. So Datadog falls within the realm of smaller software that's higher growth, or was higher growth, and always expensive. So it's kind of difficult to own these kind of stocks in this environment. Coming into this year, we kind of held, one of our highest conviction views was that if rates come down a little bit, they're still going to be pretty high. They're still going to be restrictive. And so we thought that large cap would outperform SMID across the board, and especially
small and medium.
Yes, small and medium companies, especially in technology. So with all that, I'm just kind of laying the background here, but we do like Datadog. It's basically a cloud monitoring company. So their solutions allow you to monitor your applications, your cloud delivered applications. So it's what we would call infrastructure software. And as the cloud migration continues, as AI continues to proliferate, they should be a beneficiary, but it's not, I don't think it's going to be a game changer for them in the very near future. So it's something that I think you want to hold on to for the long term, but just keep in mind it's expensive and
could be volatile.
Yes.
Okay, let's bring in a question from Katie. This one came through the inbox market call, BNNBloomberg.ca. Thoughts on Lightspeed?
Yeah, in payments, it's one that we looked at before, and I just think payments is a challenging space, right? Like oftentimes, it just comes back to go with what's worked in payments and keep it simple. And I think this story is a little more complicated. They started with point of sale solutions, and as you go beyond that, it can be difficult to kind of tack on other things and upsell and whatnot. So I just think there are cleaner names in payments. I'm going to talk about, actually, one of my top picks is a payment stock, so stay tuned for that.
Now, it seems like that Dax De Silva return story, it had an effect on the stock, but that has almost all come out of it, even as he's really been talking about, I'm going to make this a profitable business. Is that not enough for you, or is there more that needs to be done than just getting to profitability?
I think that it instilled some confidence. Fine, but with difficult stories like this, my personal style is more to just wait and see.
Okay, I think we have time for one more caller, and I'm going to squeeze it in here. Chris is in Calgary. Go ahead, Chris. You're on the line. What's your question?
Morning. My question is with regard to Alimentación Couche-Tard. With the Japanese reluctance to accept Alimentación's recent offer for the Japanese company, how do you see the share price going? It's already down about $6 or $7, and do you see a further downside, or is now a good time to get in? Thanks a lot.
Yeah, this name has been an incredible long-term story. So I think whether or not the acquisition comes through, they've really demonstrated over time their ability to perform well. So we'll see what happens with the 7 acquisition, but I think this company has been tremendous. I don't have a position, unfortunately, but I've come to respect what they've done over the long term. So.
Okay, time now for a look at past picks. The first one is good job, Shane. Nvidia. You picked Nvidia. It's up, and these are from a year ago, so August 11th, 2023. It's up 158%. I mean, that just tells you how much it has grown over the last year alone. Did you continue to hold? Did you add? Did you trim?
So it's been great. We got a little more cautious on Nvidia in June, actually. And so then naturally we had to watch it continue going up and say, oh, we made a huge mistake. But anyways, at current prices, let's not forget, this is the #1 AI company in the entire stock market. It's not even close.
Yeah.
So we can ask questions, again, coming back to the idea of how long is this demand going to last? Is AI really going to solve all the world's problems? These questions are not going to go away, but they are by far the leader. Like one key driver or key guiding light for us this year has been, okay, let's separate AI into stages. And if we're in the first stage, where is the profit going? We're investors at the end of the day. Where's the profit going? It's going to Nvidia right now. Mm-hmm. And so that's not going to change. There is some competition from other players. AMD is trying to make inroads. We're not expecting anything from Intel. Broadcom is a little bit interesting. I'm going to talk about them later. But this, again, I just want to reiterate, this is the #1 AI company, period.
Would you feel comfortable buying the dips here on weakness for anybody thinking about that?
I think every time this stock has blown up this year on a short term, it's been a buy. So we're now in the post-earnings period. We've already talked about why the market's volatile and whatnot. And in about a month, they're going to be marketing with a lot of banks in the States. Everyone knows the story, but we're coming into the ramp of their next generation product, which is supposed to be 4 times better. So I think it's way too early for the people that are trying to call the end of the tech bull run. We haven't even seen the demand for Blackwell yet. They've had a little bit of a production delay. They talked about that on the call, but I think it's still a great story. So to answer your question, on weakness, yeah, of course. I think it's in a technical bear market right now.
Let's bring in your second one, LVMH. It's down around 23%. There are concerns about the consumer, how they're holding up, signs that they're slowing down recently. Do you continue to own this one?
Yes. We had to follow up the good one with the bad one.
Yeah.
Just even it out.
At least you're up more than you're down.
On net, yeah.
Yeah.
Okay, so it's a great company. I think maybe something that I missed that we've been talking about internally was there aspirational buying that happened during COVID when people had too much money, people that couldn't afford to buy luxury goods were buying them. I think there's probably some truth to that. But I would still maintain that for a stock that's technically in the consumer discretionary sector, I would think over time this will act more like a consumer staple. That was always our view. During COVID, we saw
a staple, not a discretionary.
In a way.
Okay.
In the sense that your clientele is not very price sensitive.
Yeah.
In fact, luxury goods operate kind of in contrast to normal economics, in that sometimes when you get price hikes, people want it more. So there's that scarcity element. Anyways, part of the reason it's done poorly over the past little while is because of China. China was such a huge driver. The profit center for this business is still the fashion and leather goods business, which has LVMH, the brand Louis Vuitton, within it. And China's having growth problems right now. And then the other broader thing that we're seeing in the consumer, and we don't think the U.S. economy, for example, is recessionary right now, but there has been a lot of discretion on where you're spending and what you're spending on. Like, anything apparel related has been awful. Nike, Lululemon, this is apparel related. It's been difficult. And then you've got the dollar stores, which have been awful in the States.
Yeah, in the States.
But Walmart's been doing really well. So I think people are just picking and choosing where they're spending money.
Let's go to your third one, which has done well. It's up 34%. It was more of an industrial play, Eaton.
Yeah.
Do you still like it?
Yeah, we do. I think we've been tactical about this. I mean, our strategic view is that they are a key enabler of a few mega trends. Electrification of buildings is one, electrification of everything, as we would call it, but also enabling the build out of data centers. They make a lot of different electrical components for data centers, transformers being one that a lot of people talk about. And their electrical divisions have done extremely well, and they're showing sustained demand. They had some good stats around how many mega projects there are in North America. And part of that's been driven by the narrative around onshoring and reshoring. I don't think that's going away. I think that globalization, personally, I think it's been a good benefit for the world. But
you'd buy this weakness?
I think it's getting to the point where it was expensive, and now it's getting a little more reasonable right now.
This question is coming from Lily. Should I sell or hold my Disney? Lily has written many times and said she's quite underwater on Disney and doesn't know what to do.
Disney is a great company in the sense that they have amazing intellectual property. The question has become on this company, they were the poster child of the $200-300 million movie. We went from small and the budgets just kept going and going and going and going. And if you think about that from like a financial, like a return on investment, the bar is framework, the bar is so high, right?
Yeah.
So I forget who it was at the Oscars, a gentleman from one of the smaller studios who's saying maybe we should make $10-20 million movies instead of one $200 million movie. I think that's the right approach. So I do worry about Disney in the sense they have good IP, you know, Marvel, Star Wars, the list goes on and on and on.
Like, it's enough already. Like,
Right.
Do we need another Marvel movie?
I think we're at the 37th or 38th installment. Like, you know, it's getting a little ridiculous. But here's what I'm looking for in Disney. The engine of this company from a profitability standpoint is the parks division. If you've talked to anyone that's gone to Disney parks, they're going to tell you that they spent $1 billion and they're going to complain about it.
I know.
Do you know that?
It's in my future. I'm like, I'm saving. I don't work for retirement. I work to go to Disney one day.
There you go. So I'm kind of looking at this, given the issues the company has faced. I would rather buy Disney when parks is in a downturn than right now, because if they have issues on streaming and movies, and then parks takes a nosedive.
Which they already kind of hinted at. Not nosedive, but softer.
Yeah, that's not the right term. Rolls over.
Yeah.
Then I don't want to be there. So I would just keep an eye out. I think it's a name you can hold for the long term, but I would be careful if Parks starts to weaken.
Let's bring in Bruno from Calgary. Go ahead, Bruno. You're on the line. What's your question?
Thank you for taking my call. First of all, Amber, you do a great job. I really appreciate all your insights. My question to the guest is on Supermicro. They've had a short report that came out that hurt them. They're delayed in their filings, and then today I think J.P. Morgan said that they're not the best of all. So what's your opinion on Supermicro? Thank you very much.
That is a terrible stock chart. So I think just as a funny point, this was the weirdest S&P 500 inclusion I've ever seen.
Yeah.
But beyond that, I'm not going to go out on a limb here, because I did read the short report. There are some things that are questionable. People that have been covering the stock longer than me, and we don't have a position, have said that some of these things were known. But I would just view this in a similar light to Dell, in the sense that when I looked at the PC and server makers, I said, is this a good business? Like, all of you're basically putting together a machine for me, but all of your most expensive pieces of the machine come from other people. So where's your bargaining power? So that's kind of kept me out of the assembly type players. So that broadly keeps me less interested in.
So wouldn't touch it?
Probably not.
Let's go to a question. This one coming through X at Bay Street Amber. What is Shane's opinion on Uber?
Uber. Yes, they've done a great job kind of inflecting into profitability, and if you look at a company like Lyft, it's just not done well at all. And I think similar to Netflix, like, have they won the ride-sharing game? Like, probably. And then Uber Eats has done really well. So I think we have to give management a lot of credit for what they've done. The stock's done tremendously well over the last few years. So we're kind of on the sidelines here, but it's a name that we don't dislike it. It's just it doesn't fit in right now, but it's a good company. I think they've really solidified themselves.
Let's put in a question. This one also coming through X. Cardi wants to know your opinion on Alphabet on this weakness. And I mean, we're hitting now the lowest level since the spring for Alphabet shares. What do we do?
You just be sad. That's what I do about Alphabet. So this name was up 37% at one point this year to date. And now we've got so much regulatory risk, and I know that's always been a thing, but you've got 3 trials.
Is it feeling realer? It's not a word, but riskier?
Yeah, in the most simple argument that convinced me to get less bullish on this in the near term, I think in the long term, this is a great business. There's no indications that search is going to go the way of the dodo. They're doing a pretty good job in AI. I've been using Gemini a lot. It's probably not as good as OpenAI, but it's pretty good. YouTube is an amazing, amazing asset, one of the best deals ever made. So there's a lot of good stuff going on here, but the most convincing point is that, is the multiple on this stock capped because of the regulatory stuff that's going to come out over the next few years? Probably yes.
And the regulatory what? That they're too dominant, that they won't be able to pay, like, so fine, maybe they shouldn't pay for the exclusive contract.
Right.
Am I going to switch? Probably not. I feel like the stickiness is there. Maybe that'll be a win for them in the end.
It's a good point. And in Europe, people did not switch. They were given a choice screen, and over 95% of people chose Google.
And then on a breakup of a company, isn't that maybe good too? Because then you love YouTube, maybe you unlock some value there.
The issue with the breakup, which I think is very low likelihood to happen, is that these pieces are all tied together, right? Like
through data.
Yeah, through data and your profile and whatnot. Like imagine if you're an Android user and a YouTube user and a Chrome user, and you need to have different logins for each, and the tracking is ruined. And they're targeting the ad tech as well. So you take out the ad engine behind their ad selling. It's all very disruptive, right? Like at the very least, I think that this is a big distraction for the company. So I do think it's cheap right now, but I'm also acknowledging that in the short run, it makes sense to me that it probably can't get a lot of multiple expansion out of this name.
Charlotte emailed and wanted to know if you recommend buying ARM Holdings here.
ARM Holdings, it's a good story in terms of where the business is going, but we've been watching from the sidelines basically since it came public, and it's expensive. But here's the gist of the story: is historically the architecture that people built upon was x86, which is Intel's architecture. And ARM has been shown to be a little more flexible and less complex, and therefore more energy efficient. And so mobile is already there when it comes to ARM, adoption of ARM. The question is, will we see more ARM in the data center? Will we see more ARM in computers? And I think you will over time. So we do see the long-term vision here. It's just because of valuation and relative assessment of peers in the semiconductors industry, we would prefer other names.
Let's bring in a question. This one coming through X at Bay Street Amber. Dennis wants to know, does Tesla merit its earning multiple? That's a good question.
I think we have to think about Tesla and be honest with ourselves and say we've never bought or sold this company because of its earnings multiple. It's a story stock. And Musk himself has said, and it's confusing, we could talk about this for an hour, but if you don't believe in the autonomous side, then don't buy the stock. If you don't buy in the non-car things of the car stock, then don't buy the stock.
So don't buy this if this is just an electric vehicle car company, which is what it is today.
It's confusing, but you have to see the vision. He is a visionary person. He's very controversial. The EV side of the business, I think they're doing well. They've done really well. They've cemented themselves in North America, but there are real questions globally now if China has, and of course, when it comes to China, there's going to be government support that led to what's happened, but they're putting out what are reportedly very good vehicles for good prices. Where does that leave the landscape? So it's we're not there yet on Tesla right now.
I just asked the question on self-driving, like if I form a household, I'm likely to buy a car, and that ultimately drives, auto purchases. People feeling like they need a car to get point A to point B. But in robo-taxis, am I buying one for myself, or is it fleets that exist? And so are fleets enough of a demand pull for Tesla, if like that's the future? Because ultimately, aren't we talking about fewer cars?
In a weird way, we might be talking about more cars, but we're going to see. I feel bad saying that because traffic in Toronto is already so bad. But anyways, the idea is like you own a Tesla. If you could send it out to do some fares while you're at work or something, that's kind of a cool idea, right? So they have an existing fleet with which they could deploy the robotaxi. The self-driving, I think, is really interesting. They've been getting better at it. It's really difficult to get from 0 to 100. So what do I mean by that? Like, I think most people that have driven and get frustrated with driving, and especially other drivers, 100% cars driven by robots, would it be safer? I think yes, most definitely it would be. But how do you get from 0 to 100 if you get to 2 or 3 and you have accidents and controversy, like do things get pared back? So how do we get from here to there? But I do think it's really a productivity argument and making people less aggravated by driving. So hopefully one day you can just sit there and do work and not, you're monitoring, but you're not actually having to focus.
I want to squeeze Lawrence in. You've been so patient, Lawrence. You're on the line from London, Ontario. What's your question?
Good afternoon. I'm looking at computer cooling companies, and do you have an opinion on VRT or Eaton or any other company to buy?
Yeah, so Eaton was in one of our past picks, and we still think it's a good long-term hold. These names, these industrial names, including Eaton and Vertiv, got to the point where they were really expensive. Because
they were basically like another Nvidia play. People were treating them like that.
That's right. You can go down the whole list of derivatives from the AI build-out, but this one seems real and seems important. Like, we like this company. It's still not very cheap, but they've
Vertiv, you mean?
Vertiv.
Yeah.
They've had tremendous growth. I think they've been punished for the same reasons. It's kind of just a paring back on the AI trade. But they're delivering, their backlog continues to grow, and most importantly, like, we need their technology. They're the leader in the liquid cooling technology. You need it for these newer servers, which are much, much more heat intensive, and you can't just get by with air cooling anymore. So Vertiv is a good name. We like it.
Time now for top picks. You've hinted at this one a couple of times. Now we can finally expand on it. Broadcom is your pick, and so relevant on a day where it's selling off 9% because we thought maybe it could do a little bit better.
The bar's been high, right? It was the same. It feels the same as Nvidia. The earnings print was good. The forward outlook is optimistic. We still think it's early. All indications are that it's still early in the AI investment cycle, but it wasn't enough. But again, you talked about these dislocations that happen, and we look at this and we say, okay, the fundamental story appears to be improving, actually, and so we're comfortable here, especially on this pullback today.
Okay, let's bring in your third pick. Help me out with the pronunciation. It's Italian?
Prysmian.
Prysmian. Okay, what does it do? What do you like it?
I wanted to rant more on Broadcom. It's fine. It's fine. It's all good. Prysmian is an electrical company. The gentleman before that was asking about Vertiv and Eaton. This is another electrical equipment company. They make cables. They make, they're most famous for like subsea cables. So when we think about, I don't want to get into an ESG debate, renewable versus conventional energy. I think they both serve a purpose. But in places like Europe, where you don't have as much land, offshore wind, which has been a terrible industry. I'm getting sidetracked, but you need cables to connect generation to transmission and then distribution. So the cables are used for that. They're also used in applications around the data center as well. And so, but the company's most famous for their high voltage cables for transmission. And it's done extremely well. And they have a lot of pricing power because supply is tight, and it's going to be tight for the next little while. So it's a good company, one that's a little bit less known, but a clear beneficiary of the energy transition, and a little bit on the data center side too.
Visa is your third pick, and I ask all my guests this about Visa. Are you concerned if there's a consumer slowdown that Visa right now is not a good play?
Yeah, that's a valid point. I mean, part of their profitability is tied to the number of transactions, the value of transactions, tied to travel and whatnot. I did mention that it's not our base case really for a recession right now. And I also talked about a little bit how consumers are picking and choosing where to spend, but we don't see consumer spending falling off a cliff. So I think Visa is interesting because the valuation is a lot lower right now than it typically is, and there's concerns about regulation around credit interchange in the States. That is a concern, but we think that Visa will still get their piece of the pie. That regulation is actually mostly going to impact banks. Without getting into it too much, if the interchange fee that the banks get goes down, then they're going to offset that by, unfortunately, giving us less rewards, which is really sad. And then also, they could also toggle their interest charged on outstanding accounts as well to kind of make up for that. But we think Visa and MasterCard as well will kind of get by and will still get their piece of the pie.